and welcome to this week's LOLC Securities Weekly Market Roundup. I am Megara Vijayamana.
And I am Tharidu Amarasekara. This is the sound of profitability.
Sri Lanka's export sector has kicked off 2026 with the highest January earnings in a decade, with $1.53 billion recorded in January, reflecting a solid 13.7% year-on-year growth. The latest data released by the Sri Lanka Export Development Board show that the total merchandise exports shipped in January were up by 10.66% year-on-year to over $1.16 billion, while estimated total service earnings in the month increased by 24.59% year-on-year to $367.55 million. Addressing the media, EDB Chairman and CEO Mangala Vijay Singha described the January outcome as a promising start towards achieving the country's annual export targets. The robust January figures build on the positive trajectory recorded in 2025. Sri Lanka's total export earnings reached over $17.25 billion last year, marking a 5.6% year-on-year increase and achieving nearly 95% of the $18.2 billion export target. For 2026, Sri Lanka has set an ambitious export revenue target of $20 billion, reflecting anticipated year-on-year growth of 10 to 12%. Merchandise exports are expected to exceed $15.7 billion in 2026, while service exports are projected to rise to $4.3 billion.
Sri Lanka's central bank will revisit its inflation target as a part of renewing an agreement with the government, its Economic Research Director S. Jagajeevan said. Under the 5% inflation target, Sri Lanka ran into repeated currency crisis after a civil war as forex shortages emerged from liquidity injections made to target a mid-corridor rate to push up cost of living by 5% per year without formal parliamentary approval. The aggressive macroeconomic policy permissible under a 5% target, what the IMF calls policy support, eventually led to sovereign default, critics have said. The renewed calls are to raise it to 7%.
Sri Lanka has recorded foreign direct investments of $1,062.8 million in 2025 as Singapore and India as top investors, according to the BOI. The manufacturing sector emerged as the primary driver of the foreign investment inflows last year, contributing $486 million led by rubber products, according to the BOI data. Infrastructure was the second biggest sector, which saw an FDI of $404.6 million, with port container terminals bringing in $275.3 million. The service sectors led by IT, BPO and hospitality sectors contributed $168.1 million to the year's actual investment total. And now it's time for the corporate highlights.
LOLC Gas has said that the LPG supply to the market is normalizing after the government extended its support to facilitate the release and operationalization of LOLC Gas PLC's Hambantota terminal. The company said the temporary supply constraint arose during the transition from a previous international supplier to a newly on-board supplier following the conclusion of the earlier supply agreement. During this interim period, scheduling adjustments in cargo arrivals affected distribution timelines. LOLC Gas noted that its primary large-scale operations are based at the Hambantota terminal and that due to prevailing regulatory conditions, the facility could not be fully utilized for domestic market operations. It said government authorities are extending their support to strengthen national LPG supply stability. The company added that cargo shipments under the new supply arrangement have been secured and that distribution normalization is currently underway, with operational teams working to accelerate deliveries and restore full market supply at the earliest.
Overseas Realty Ceylon plc released the fourth quarter unaudited financial statements for the year ending 31st December 2025, where the group recorded strong performance, where the group revenue was at 11,944 million rupees, recording a 49% year-over-year growth. This growth was primarily driven by high apartment sales and increased rental income across investment properties. The depreciation of the LKR resulted in a net exchange loss on foreign currency loans of 511 million rupees compared to a gain of 1,733 million rupees in 2024. The net fair value gain recorded from investment properties was 3,223 million rupees compared to a gain of 1,822 million rupees in the same period of last year. Revenue from the World Trade Center Colombo amounted to 2,865 million rupees, representing a 6% increase over the previous year, mainly attributable to improved rental rates. Revenue from residential sales at Havelock City reached 2,824 million rupees, which is a 57% increase compared to 2024. Here is Tarindo with the ESG update.
Sri Lanka's renewable energy firm LOLC said that it has commissioned its Madampe 6 megawatt solar plant in Bangadeniya, Chilau. The project was implemented through Vidul Madampe Solar Power Private Limited, a fully owned subsidiary of Vidul Lanka PLC. The plant is expected to generate 9.9 gigawatts of clean energy and supply to the national grid, contributing to the achievement of the nation's renewable energy targets and sustainability goals, Vidul Lanka said in a stock exchange filing. Here's Megara with the international update of the week.
US President Donald Trump's new global tariffs have come into effect at 10% despite an effort to introduce them at a higher rate. However, according to official documents, the tariffs have been set at the lower rate momentarily with no directive to increase the rate issued. The BBC has contacted the White House for comment. The White House is working to update the rate to 15% to reflect Trump's announcement, a White House official told Reuters. This was without saying when the change might come into force. The administration is applying the levy under Section 122 of the 1974 Trade Act, which allows the president to impose the charge for 150 days without congressional approval.
And that's it for this week's LOLC Securities Weekly Market Roundup. No matter what investment decision you make it with the right intent. We will see you in a brand new week.